Hi, I'm Jimmy. In this video, I'm going to walk through how we can identify exactly when to buy a stock. I believe that many investors often ask themselves, they say to themselves, I really like this company, but when do I buy this stock or this bond or whatever the investment may be? My goal with this video is to give a reliable method for identifying the when we should buy a stock. And I'm going to use previous research videos that I've done, videos where I've talked about an analysis to illustrate how we could have applied this method if we ever were interested in buying one of those companies. So our first step is to pick a company that we know and one that we want to own, one that we like. So I've got three examples. I'm going to use three different companies that I've previously made videos on: Apple, Disney, and JP Morgan. But this would work for pretty much any of the research videos that I've put up, or any of the companies that you've researched. So let me lay the groundwork real quick. Well, I did the Apple video back in September of last year, and the price was about $220, and I used a forward PE valuation, and we made the case that the fair value of the stock was about $240 at that time. With Disney, we researched that one back in October. The stock was about $115 at the time, and I made the case that the fair value of the stock should be about $122 per share. And with Disney stock, we used a discounted cash flow technique. And then jumping over to JP Morgan, well, here we used price to tangible book value to value the stock. The stock was at about 103 at the time, and we made the case that it should be worth about $110 per share. Now, I'm using these three examples because in each of these cases, well, we used a different valuation technique to try to determine the fair value of the stock. Now, I want to point something out. I always try to use the term fair value and not price target. Oftentimes, you may hear analysts say, oh, the price target is this, or the price target is that, or the target price, whatever they might say. And although they pretty much mean the exact same thing, I'm a big fan of the concept of fair value instead, mostly because I believe in long-term investing. And I feel like price target implies that we're somehow going to jump out of that stock or that company that we've invested in once it reaches that price. Okay, so that being said, clearly, after we pick the company that we like, our next step is to come up with the fair value of that stock. So I'm going to be doing a whole series of videos on how to come up with the fair value of stocks. The first one is going to be on the discounted cash flow method. That's my personal favorite. That one's going to be coming out soon. But then I plan on doing a whole series of videos on many different ways to come up with the fair value of stocks. And then maybe at the end, we'll try to hit some ways to value bonds. Okay, so step one, find the company. Step two, research it and come up with the fair value. Now, once we come up with the fair value, and this is key, we need to try to be honest with ourselves as to our level of confidence with our calculation of the fair value. So with the Disney pick as an example, I would classify, after the research I had done, that I would classify that one as highly confident. With the JP Morgan one, I would say it was close, not quite as high as Disney, but I'll say pretty confident or fairly confident. With the Apple one, I was probably a little less confident. Now, that might have to do with the fact that I like discounted cash flow, which I used for Disney, and price to tangible book value, which is what I used for JP Morgan. I like those two methods, and they apply very well to that situation. I use PE for Apple, and price to earnings. To me, it's among the weaker valuation techniques. So I was okay with it, but I wasn't thrilled with it. I think there's just a little bit more room for error with that type of valuation. Okay, so now that we know how confident we are in our calculation of fair value, now it's time for us to apply a margin of safety to that fair value. Now, this is the key to the question, when do I buy a stock? So each of us should set our own margin of safety requirements based on our own risk profiles. But for me, I'm going to say that if I'm very confident in my analysis, then I'm going to apply a margin of safety of, let's say, 15%. If I'm fairly confident, well, then I'm going to apply a margin of safety of 20%. And if it lands in the somewhat confident bucket, I'm going to call it 25%. Clearly, the more risk that you see in it, or the less confident you are, the higher the margin of safety should be. Then, if there's a company that I'm not confident at all in, or I don't like my calculation at all, I'm just going to skip that. That's the beautiful part to investing, is you could just move on to the next company. There's tons of good companies out there. Okay, so using Disney. Back in the day, we did the research. The stock was trading at about $115 a share. Well, I believe that the fair value at that time was $122 per share. So when we buy Disney, we want it to be with a 15% margin of safety below our calculated fair value. So if we multiply 122 times 0.85, that accounts for 15%, we get $104 a share. Now, this is a chart of what Disney looked like on the day we created it. We're at the very end, the day we created the video, that was when the research was done. So as we can see, Disney stock needed to get all the way back to this level before it would meet our margin of safety requirements. But that's okay. Then we do the same thing for JP Morgan. Well, we apply our 20% margin of safety to our calculated fair value, which was $110, and we need to enter at about $88 per share. Well, the stock, JP Morgan stock, hadn't been at $88 per share in the entire year leading up to when we did our research. Now, jumping over to Apple, now we want to apply a 25% margin of safety to our fair value calculation of $240 a share. And that means we want to enter at about $180. So this is Apple's chart. And as we could see, optimism was pretty high. The stock was moving higher. So there was a reasonable chance at the time to believe it might never get back down to that level. But that's okay. So after we finish all of our research, I believe it makes sense to put together a table like this. This simply maps out the day we did the analysis, our calculated fair value, our margin of safety, and our DL entry point. And this finally gives us the answer to the question, when do I buy a stock? It's really as simple as wait for it to get below our levels. Now, one word of caution, and that is that it can take a long time for stocks to get to our ideal entry point, if they ever get there. So we need to keep our research up to date. So let's look at Disney as an example. So with Disney, we used a discounted cash flow valuation, and our anticipated cash flow for 2018 was $97.20. And the actual free cash flow for that year came in at $98.30. So it came in better than expected. Now, this isn't all we want to look at. This is just one illustration of it. But we also want to check the news, check the new company filings, see if projections had changed any. Basically, we want to challenge our own investment thesis to see if it's still in play. And assuming it is still in play, we can keep waiting. Okay, so this is an updated chart of Disney, and this is where we did our research, and this is the way the stock would have played out. And thanks to the pullback that happened for the stock market at the end of 2018, well, Disney would have hit our entry price. Okay, now switching over to Apple, even with our 25% margin of safety, we would have had an opportunity to buy Apple. There's when we first did our research, here's where the stock is now, and here's our entry level. And we would have done quite well with both of these stocks had we been disciplined with our approach. But what about JP Morgan? Well, here, it never quite got to where we wanted to buy it. And I'm fine with that, even though I'm a huge fan of JP Morgan. But I'm a big fan at the right price. So the more stocks that we research, the longer this list is going to get for us, and the more opportunities will eventually come our way. Now, as I finish up the Dow 30 analysis, I plan on putting together a table just like this for all 30 companies, mapping out our ideal entry points as of when we build the different portfolios. And I recommend that each of us have our own list just like this, applying our own personal level of margin of safety to each stock that we research and the ones that we are considering and investing in. So as you may have noticed, the real answer to the question, when do I buy a stock, can really be, where do I buy the stock? Once you find that level, well, then it's just a matter of sitting, watching the fundamentals, and waiting for it to get to your level. So that is how I do it. But how do you do it? Do you do it the same way? Does this way make sense to you? Do you have any questions that I didn't fully cover, I didn't explain well enough in this video, outside of how do you come up with a fair value? Because like I said, I'm going to come up with a whole slew of videos covering that exact topic. If you haven't done so yet, hit subscribe so you can get those videos when they come up. Now, another question I would have for you is, what is your personal level of margin of safety? Do you have one? Because I have found that can vary pretty wildly from investor to investor. So thank you for sticking with me all the way to the end of the videos. If you have any questions or comments, please put them in the comments below. If you haven't done so, hit subscribe, and I'll see you in the next video. Thanks.